Hey everyone, I'm your host Alexis. Welcome to the Alexis Investing channel for today's monthly update number 3 for March 2020. By the way, let's start with this. I'm wearing this hat because I can't get any haircut in quarantine, so I'm doing my best, okay? But either way, if you're interested in investment, passive income and money, hit that subscribe button right now and the bell to be notified for upcoming videos. I hope everyone is having an amazing day so far, and just before watching this video, don't forget to comment down below a question that you would like me to answer in the next monthly update, so go and do this right now. And without any further ado, let's go into the monthly overview. March 2020 was a pretty interesting month. We got a big loss. The oil price is dropping. The Fed cut the interest rate 3 times. We have huge market volatility, and also we got Robinhood that shut down during the 2 best days. And let's start today with the big loss. As you can see on the top right corner, I actually lost about 25% of my investment. This is quite big, it's actually really big, and I'm gonna speak a bit about this right now. So I got $3,000 invested in this account, and I'm actually right now down $246, which is a lot, as I just said. It's mainly because of, what's going on in the world right now. I can say it on YouTube apparently, but that's because of it. We have a huge market drop. I mean, we're gonna speak also about the Feds that cut interest 3 times in 1 month, which is absolutely insane. And we're gonna see how everything is doing, because I'm gonna show my whole portfolio in a second. Okay, now let's speak about the oil price. Oil is down 21% after its biggest drop in decades following Saudi price cuts that sparked a race to the bottom with Russia. So if you're not aware about the situation, it's pretty much Saudi Arabia that announced that they are gonna produce like a lot more than what they're supposed to do, because there is a contract between the main countries that produce oil, which is to restrict them not to do too much oil, because otherwise if you have so much supply and the demand would stay the same, the price will obviously drop. And Saudi Arabia actually augmented the production of oil because of Russia, who refused actually to lower the production so that the price of the oil will stay pretty much high during the wait time that we're having right now as in the whole world. So because of that, the oil price just smashed itself on the ground, down more than 30% in 1 day. This is just not normal, and apparently the market has not seen this since 1991 with the Gulf War, which is pretty hard. I'm a little bit affected by this because I own a few companies who produce oil, who is selling oil, but at the same time, I knew that, if you invest into oil, you know that they're gonna have big problem in the future. So don't put a massive amount of your portfolio in here, except if you're an expert and you know what you're doing. But for my part, it's only a small portion of my portfolio, and I'm actually gonna show you in a minute that I added a little bit of my old companies into my portfolio. So now let's speak about the Fed interest rate that got cut, as you can see on the graph right here. Since 1955, pretty much, there has been at least a rate that the Fed is taking as interest. But as you can see, in 2008, they actually cut it for the first time because of the big economic crisis that happened. When they cut rate, it's to stimulate the economy so that it starts again from the bottom and just skyrocket. You know that when they change the interest rate, it's always to stabilize the economy. When the rate is so high, it's to slow down the economy actually, because it's going too fast and they are risking a recession pretty much, or actually a big correction in the market, which will be kind of a recession. But you can see in 2008 they cut it for the first time, and like 5 years ago, 2015, 2016, the rate actually started to come back again because people were getting out of the recession, and actually the economy was growing again. So you can see it was growing until 2020, where you can see a big drop. Just like in 2008, they cut the rate to 0%, which is pretty bad, because it means that if you want to borrow money right now, you have a 0% interest on it. So at the same time, it's a bad thing and a good thing, because it's pretty much saying to people, you need to borrow money because you don't have any interest to pay on it. So you can start investing, you can start buying homes, and just starting the economy back again. But at the same time, it means that we are in a situation where the market is bad and they're doing this so that the market gets better. So that's a big news, and you always have to watch out for this kind of stuff to happen. Now, with the market volatility, you can see right here, let me show you for 1 month. This is the S&P 500, which is a good example of how the market is doing pretty much all the time. So you can see that less than a month ago, 4th of March, it was 3,130. On the 23rd of March, it was 2,237. So they had a huge drop from here to there of about almost 30%. And you need to know that what the S&P is doing is what the market is doing, pretty much really close to each other. So it means that the market almost dropped 30% in value. This is what I got in my portfolio pretty much. I was already negative 2% and I went to about 30% negative. So this is a really good example of how the market is doing. You can actually watch the S&P and also the Dow Jones, which represent really much how the market is going right now. But you can see also that during this time, from the 23rd to today, it's up almost 14%, and I can show you in my portfolio that everything, the prices of the stocks I own went down and then bounced up. So hopefully it will start to continue like this. I'm not really sure about it since the US is in a bad position right now with the quarantine and all the things going on. So the market will probably go down still, but as I will speak about in a second, it's actually an opportunity for people to start investing right now, because the prices are so low. It's like it's sold time. I mean, it's time to buy now. So yeah, pretty much that's what's going on in the market right now. And to finish with the big news, we got Robinhood, who actually had a shutdown twice this month. So really negative thing for Robinhood. They had a lot of criticism, and well, one thing that happened is that the market was such in a bad position that everybody wanted to connect on the app. Everybody wanted to sell stocks or buy stocks or do something at least. But the app was not ready for such an amount of people to come, and they actually had a problem, a shutdown for the application. That happened twice. But the bad thing about this is that people were not allowed actually to withdraw the money, to sell the stocks they wanted to sell, and actually for some of them the prices still continue to go down and they actually lost money on this thing. But also the days where it happened was actually one of the best day the market had in this period, and actually in a really long time too, I think. So people were really upset about this, and my next video is going to be about which alternative you can get from Robinhood, since a lot of people are actually looking for something else to do. I'm on Trading 212. I have a link in my description if you want to check out the app. And my next video will be about which is the best brokerage app to have, and especially as a European, since we can all get Robinhood and M1 Finance. So that's going to be my next video. So now let's speak about my portfolio. This month, and for the first time, I actually added $1,000 to my portfolio, which will be the same for every single month and the rest of the year. I will add $1,000 every single month. I actually purchased new stocks that I didn't own yet. So I got Carnival, which is a company about cruise, and you know that the prices of cruises went down a lot because, well, they couldn't do cruises for a long time. So I bought pretty much just before the big drop. So I was a bit upset about this, but you know what, it's actually okay. I was able to buy a bit more, which took the price a little bit lower, so that's okay for me. I bought 2 Delta Airlines because same thing with cruises, airlines are actually in a bad position right now, and since Boeing cut their dividends, I'm watching closely for these ones, because if they cut the dividends, I'm gonna sell the shares I own. And to finish, I got 5 Walgreen. So this one, it's a pretty safe one, and I'm actually happy that I bought it because the prices was pretty low, and now it's going up a little bit more. So I think I had a good timing on this one, even though I'm not trying to time the market, so I'm pretty happy with this one. I also bought different shares to have a stronger position on it. The biggest one that I did was Wells Fargo. As I said I think it was the first monthly update, I was going to get a stronger position on Wells Fargo. Well, that's exactly what I did. I bought 6 shares of Wells Fargo, and that was unlucky for me since it's still continuing to go down, and that's now my biggest position in the portfolio. I also bought 2 more AT&T. which is a share that I like and I think is doing great even in rough times, and I'm not scared at all about this one, so pretty safe investment too, I guess. Here is one that I bought that is an oil company actually, so that's ExxonMobil. I bought one share of it who did actually really bad since the big drop of oil went right after I bought it, so that's a bit sad again, but who am I to judge? What am I saying? I bought actually one more S&P 500, so it's about the, as I just show you the graph before, it's a good representation of how the market is doing, so obviously it went down still. That's still alright for me. And I finished by having a stronger position into Cisco. I bought 2 more shares of Cisco. So one mistake that I could have avoided and that actually would have made those investments a little bit more profitable, but they can't be profitable right now. Let's face it, it's only going down. I bought them at a really bad timing, but as I just said, I'm not trying to time the market, but maybe next time I'll buy for a longer period of time. So I won't buy all the shares in one day. I will probably buy once a day, for example, because at this moment, if the price of the share still go down, then I will have a better value on it. But you know, you always have the danger of it going up. So I'm gonna try to do this for next time. And also my dividend income, my annual dividend income actually reached $100. So it means that pretty much every 3 months, my dividend income will grow from $100 every month. Every 3 months, it would grow $100.
Hey, it's me from the future. I actually forgot to show you my dividend income for this month. As you can see, March I got $5.77 worth of dividends. So if you can see on the graph here, it's still going up. I'm about $10 worth of dividend payments, and you can see right here, here, that my total annual income, as I was speaking to in the video, actually is to almost $1. And my dividend yield is super high since I got minus 25% growth. So there you go, back to the video.
So that's cool. I'm really happy about it, and even though the market is doing really bad right now, I'm really happy to be a new investor and that the majority of my money can be invested right now, and that I didn't invest like a year ago. I'll be pretty upset right now, but I'm doing just fine. I'm happy that the prices are going down so I can buy more of them. And by the way, if you don't know what it is, when you buy a stock at one price, let's say it's an average price of $40, and then the price go down to $30, and you're like, okay, nice, I can buy more of them, and you buy again at $30. Your average cost will be at $35, and this is called dollar cost averaging. It's pretty much buying stocks while they are at the same level or lower so that you have a bigger profitability. Let's say you have bigger profit at the end of the day. So right now, this is everything I did for this month. As you saw, I added $1,000, bought some new stocks, reinforced some of the one that I already own, and while I'm just waiting for the market to be better, actually, a lot of people are saying that right now we are in a bear market, which I would say I agree with, since it's only going down pretty much every day, but as I'll just show you, it's going up and down and up and down. So you never know how it's gonna be. As I said at the beginning of the video, if you want to ask a question, a specific question, just ask it in the comments down below. I'm gonna answer it in the next monthly update, so for April 2020. It was your host Alexis. I hope you enjoyed this video. If you like it, maybe you can subscribe or you can even like the video. It really depends, but either way, I hope you enjoyed it, and I see you guys next week for the best app to use as a European to invest. Bye bye.